with chaos at the New York Stock Exchange.
Get back in there at once and sell!
We are looking at major records for the Dow.
Now is the time to buy.
Well, the law of gravity hit Wall Street today.
We're down by between 3 and 4.5%. The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
You gonna do something or just stand there and bleed?
The whole town's gone crazy.
Hello and welcome to this week's edition of the Big Money Report. I'm your host, David Booth, President and Chief Investment Officer at BIG Investment Services. That's BIG, Booth Investment Group. We're full-service financial advisory based out of Dover, Delaware, serving clients all across America. And you can read all about us at abigplan.com. That's www.abigplan.com. I like to put the show together once a week just to give you a recap of the week behind and a peek at the week and weeks to come. Trying to keep you up to speed with you and your money. And we're glad you're with us today. It is Friday, October 10th, 2025. Some big shout outs to Mike and Carol, Jody, and Jim. She got Jim listening in too. Michelle, big congrats to you tying the knot this week. Shout out to Kevin and Steve in upstate New York. And a big shout out to Karen. Karen, I got thinking about you after we hung up. We go way back, way back. And then Mike, who's also listening in, who introduced us, we go even further back. You know what, Karen, over all the years and all that we've been through, you still do not have Clorox in your portfolio. I was thinking about that. You missed that opportunity way back then. But anyway, inside joke, but it's a funny one, believe me. Let's get back to the numbers. What did the market do this week? It didn't do a whole heck of a lot. It was down quite a bit. Dow Jones down 2.7%, the S&P down 2.4%, the NASDAQ Composite down 2.5% on the week, and the small cap index down 3.3% on the week. And all of it happened today. It was a very ugly day on Wall Street, and it's because of China tensions raising their ugly head once again. We'll talk a little bit more about it in just a second. The volatility index, I've been watching this one really closely. One of our top technical strategists that we work with, they've been saying, listen, if the volatility index, the VIX, VIX, if it breaks 18 to the upside, watch out, things could get a little dicey. Well, it's at 21.6, up 30% on the week, all of that happening today. And again, I think it could spell a little bit more weakness here in the coming days for the market. Long-term bonds as measured by the TLT, I'm really happy to see this, up 1.38% on the week. And the reason I'm so happy to see that is because it's a traditional flight to safety type of move. And I'm glad to see it because U.S. bonds haven't been looking all that safe. Investors haven't been going to U.S. bonds like they normally do when markets go awry here in 2025. But they did this week, and especially today, and I'm happy to see that. Hopefully that is a change of course here and the rest of the world is back on board with U.S. bonds being a safe haven. When you take a look at the sectors, they were all really lousy except the most defensive ones. Utilities up 1.4% and consumer staples, speaking of Clorox, consumer staples flat on the week. So they really held up. Everything else was down and down a lot, 2, 3, 4%. I'm not going to go through them all. They were all got blown up pretty badly. Retail sales really taking a hit too, down 7%. And I've got to tell you, I watch the markets like a hawk, folks. I watch the details of the market. I watch the underpinnings of the market. And I haven't liked some of the stuff I've seen here in recent weeks. I've got a client that wanted some cruise line stock, a certain number of shares of cruise line stocks. You can get discounts on your cruises. So I've been watching stock for them and I've been watching it get clobbered. I've been watching the stock take a beating over the past month. Just did pick up some shares for them. But in addition to that, some of the consumer discretionary stocks, even something that we have in our models, they've been down a lot here over the past month or so. The one that we have, we're still up about 50% on it from where we bought it in April, but it's down about 30% from its highs. And I'm looking to buy some more of it. So I'll be watching that one pretty close. I can't say what it is, right? I got to wait till I buy it. If I tell you what it is ahead of time, we run the risk of folks trying to get out in front of us on that. So when I buy it, I'll tell you all about it. But anyway, consumer discretionary stocks have not been looking good at all, right? And then when you hear some of the reports that have been coming out from earnings, we've had Levi and Pepsi and Constellation Brands. And although some of the earnings numbers have looked good, some of the guidance has been a little weak, and there's been some cracks in some of the numbers in regards to consumer demand. And I'll take it a step further. Anecdotally, this is just anecdotally, these are just conversations that I have. I was talking to who I consider probably the number one real estate guru in the entire state of Delaware this past week. And he said, David, some weird stuff's going on at the beach. There's real estate that's not moving, stuff that should be moving within a couple of weeks, and it's just staying on the market. No interest. We're talking 100 days, 180 days, property that should have gone a long time ago on the market for almost a year. And that's just something to make you go, that's interesting. And then I was talking to a liquor store owner, and he said he's talking to a bunch of other folks in the industry, in the region, and the talk is that demand is slowing pretty dramatically. I was talking to a guy with a huge drywall company over on the western shore of Maryland, and this company is well established, tons of connections. They're always busy. And he said after this job that they have right now, there's nothing in the pipeline. These are anecdotal, okay, but they're things that get my attention because as I hear what some of these companies are saying and I hear what some of these smaller businesses are saying, it's like, And then you watch the markets and you can see a market that's been going up and up and up, but it's being driven by what? It's been driven by artificial intelligence plays, tech stocks, things like that, where there's other areas of this market that have been really weak, to say the least. So these are all things I've been watching and just kind of queuing in on. Gold and silver this week, they were up again. Gold up 3.2% and hitting a record $4,000 an ounce, the highest level on record. So good for you, gold. And silver up 4.4%, trying to play catch up. So the metal's doing pretty well this week. Again, maybe some concerns out there about geopolitical tensions and sovereign debt and things along those lines. So what's moving markets this week? Well, I mentioned AI and tech, and I am really happy to say one of our larger holdings in our moderate risk models, AMD, had a monster week, up over 30% on the week. At one point, it was up over 40%, but it pulled back today with this market correction. And why did it have such a big week? There was an announcement with OpenAI, a artificial intelligence company, teaming up with AMD. And Daniel, my colleague at the office, had a question for me. And normally, I'm the one always asking Daniel the questions. Daniel's like the smart one in our office. He just has all the knowledge. He's a walking financial encyclopedia. Matter of fact, if you ever stop in the office, just ask Daniel some random financial question just so he can answer it for you, because he'll have the answer. I'm pretty sure of it. So anyway, he said, David, what are we doing with AMD? And do you think this deal warrants this push higher? I said, well, right now, we're not going to do anything with it because when you have a move like this in AMD, history suggests that the next 3 months, the risk reward looks pretty strong. So we're probably going to stick with that for a while longer. And I said, but as far as this deal being worth the move, probably not. Probably not. But here's the thing. It's not that the deal is worth all that. It's that the market sees the deal as confirmation that AMD is a player in the artificial intelligence space. NVIDIA is the name that everyone talks about. And, we don't own NVIDIA in our models. Now, my competitors are hearing that right now. They're thinking, whoa, you don't own NVIDIA? Loser. Well, just so you know, when you've beaten the S&P 500 3 out of 5 years with a moderate risk portfolio, 2 of those years, you've nearly doubled the return. Without NVIDIA, you really don't need it. And the reason why we don't have NVIDIA is this. I like it. It's a great company. Jensen Huang's super brilliant. And I've wanted to buy it on a couple of occasions. It just didn't get low enough for my price target. And the reason why we don't have it is because the majority of their revenues are coming from just 4 customers. Just 4. And of those customers, if they back off, if they go a different direction, if they build their own chips, which they've been talking about, that could be something that could unravel NVIDIA very, very quickly. I just don't trust the lack of diversity in their revenue. Where AMD, they're very well diversified. Yes, they're playing in artificial intelligence, but they're also deeply involved with data centers and personal compute. I just think it's a better diversified revenue stream, and that's what makes me feel a bit more comfortable. And hey, it's up 77% on the year, 78%. We'll take it. I think it can go higher. I think I mentioned a couple months ago, if it crossed $210 a share, it was probably going much higher. It's done that this week. So it could be choppy here in the short term, but I think it pushes on. So we'll be watching that pretty closely. We might trim it. I'm just not ready to do that quite yet. Aside from that, what else is going on? We're not getting economic data. The government is still shut down. There's been no movement on that. The concern there is that now people are getting closer to starting to miss paychecks. That's going to have an impact on their lives and also an impact probably on the overall economy. So those are all things that are of concern, and there just seems to be no headroom being made there. And then, of course, we got the big story today, China and the U.S. And I kind of saw this coming a couple of days ago. I'm like, this is not looking good. I saw a story a couple of days ago about China cracking down on rare earth exports. These are the things that we need to make magnets. EVs, robotics, anything with electrical motors needs magnets. And I saw the story where China was restricting rare earth exports. And then on top of that, I saw the story where they're putting on fees for American ships coming into port. So it's just a matter of time before President Trump spoke up, and he spoke up today, and he said there could be some really big tariffs coming China's way. Said there may be no reason to meet with President Xi. They had a scheduled meeting coming up. He said maybe there's no reason to even meet at this point in time. Just a lot of friction there bubbling up very quickly here this week, and the market reflected the negativity to that. Listen, go back to the spring. We saw it play out. The market was down 19% in a matter of a couple of weeks. It does not like these heavy-duty trade tensions between U.S. and China, and it looks like they are bubbling up again. So we'll have to see how that plays out. What are we doing, right? That's probably the big question. Look, we've done a lot already. We've been trimming like crazy the last few weeks. We've trimmed a lot. I think we're in a really great position right now, moving forward from here. Very much prepared for any sort of drawdown in the market. For new clients, for those that have added money recently, we've just been scaling your money into the market very slowly, put into the defensive things like that. There's still a lot of stocks to buy for you. We haven't bought yet, but maybe the next few days will give us that opportunity. I did buy financials for you all this week, for those that didn't have them yet, because they start to report next week. And I think the financials, the banks can have pretty strong earnings. So I want to make sure that we were positioned for that before it happened. But other than that, we've done a lot of the work that we needed to do to be prepared for what's happening right now. If the market wants to go lower, that's wonderful. I would like to see it happen. We can get new money worked into our models, and we can add to some things that I would like to add to. I mentioned a consumer discretionary stock earlier that I'm looking to buy some more of, and also another company related to the chip space, not AMD. So we'll see what happens if we get some opportunities to do some more buying. But other than that, earnings are going to kick into high gear next week. There's not going to be a lot of economic data. We will get a CPI number, an inflation number from the government on October 25th. They announced that today, but there's still no real data to give us any inclination what the Fed may or may not do at their next meeting. And that's been a big question as well. So we'll see how things come together in regards to that. So I'm in pretty good shape. We're in pretty good shape. I like where we sit. We were well prepared for this move to the downside. Hopefully it'll go down a little further. We can take full advantage of it. Other than that, we're just going to keep doing what we do. So between now and next few meetings, you're thinking about your future, your long-term goals, all the things you want to do with you and your money. Maybe it's get married and go to France on your honeymoon. Michelle, maybe it is buy that second house, pay for that child's college education, take that big trip. Hey, you know what your goals are. Don't just think about it. Think big. Think B-I-G. And I will talk to you next week.
Thank you for listening to this week's edition of the Big Money Report with your host, David Booth, President and Financial Advisor at BIG Investment Services. For more information on BIG and how you can access their planning and investment management services, visit them at abigplan.com. That's abigplan.com. Or call them toll-free at 866-946-PLAN. That's 866-946-7526. The foregoing content reflects the opinions of David Booth and Booth Investment Group Incorporated and is subject to change at any time without notice. There's no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Content provided herein is for informational purposes only and should not be used or construed as investment advice or a recommendation regarding the purchase or sale of any security. All investing involves risk, including the potential for loss of principal. There is no guarantee that any investment plan or strategy will be successful. Please consult a professional before investing.